My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today our special guest Jason Kenney is zooming in from Nashville, and Jason is into multifamily properties like many of us are, and he's got a cool story around this. He started off in single family homes, got into multifamily, did a whole bunch of them as a limited partner, as an investor in these deals, and now he is becoming an active investor, a general partner in these kind of real estate syndications. We're going to be talking about that, why he's doing that, why he's making the switch, and what he's learned about this so far. So Jason, welcome to the show. Great to have you.
Yeah, thanks for having me, Dave. Happy to be here.
So Jason, give us a little snapshot of what your portfolio currently looks like, between if you've still got any single family homes or if it's all multifamily, and if so, what are you investing in? What areas, what markets? What's kind of the buy box?
Yeah, so just kind of the 35,000 foot view. I have both an active and a passive portfolio. So on the active side, I still have all of my single family homes.
Nice.
And that I actively manage. I also am under contract now for a multifamily property that will be in my portfolio that I'll be actively managing.
Congratulations.
Nice. Yeah, thank you. So we're going through due diligence, and we're wrapping that process up. And then on the passive side, I also do quite a bit of investing as limited partner, specifically in multifamily syndications. And I think at this point we're in, 5 different syndications and about 1,200 units.
Okay, very cool. So the single family homes, how long ago did you get started with that, Jason?
That started back in about 2019. Mm-hmm. And at that time, I was actually living in Denver, Colorado. We kind of bounced around the country quite a bit, but we started investing in 2019, right before our first child was on the way, and we were making some lifestyle changes. And at that time, the Denver area was a difficult place to get the kind of returns that we wanted. We're interested in cash flow and passive income, and a lot of the investing there was more speculative in nature.
Yeah, so appreciation based. Yeah.
Appreciation based. So I had to figure out a way to do some long distance investing. And so I built a team and found a market in the Midwest that I really liked, did some research, and then started acquiring single family rentals in about 2019.
Nice. So if you don't mind me asking, how many single family homes do you have in the portfolio? 7. Nice. Very nice. And you're actively involved or passively involved in 5 syndications at the moment in multifamily properties. Is that across different markets or one particular market that you focus on primarily?
Different markets, but the Midwest region. So I like linear growth markets. I'm not one of those guys that likes the big cyclical markets, the sexy markets on the coast. I like more slow and steady, more predictable kind of returns. But so in Ohio and also in the Indianapolis area. Very
cool. And you've got your first multifamily under contract. That is very, very exciting. Tell me about that deal. You're in the midst of due diligence, so tell me a little bit about that.
Yeah, so this deal was about 2 years in the making. So I've been underwriting properties and building relationships and trying to purchase a multifamily property for a while. And put in some offers, didn't get any responses, didn't get anything under contract until about 3 months ago. Found a great opportunity through some broker relationships. It was a pocket listing, and it's a 12-unit property just north of Nashville. It's in a really good area north of Nashville. About population growth is about 2 or 3 times the national average. It's right in the path of progress. So it's a great spot. The person who owns the building is self-managing, and they're kind of in over their head and are getting older.
They're not having fun being landlords anymore.
Not having a fun being a landlord, and they've tried really hard to take care of the property and do what should be done. But they ended up in a situation where there's been a lot of deferred maintenance and things that need to be taken care of. So it's a good opportunity for them to get out from underneath the property. It's a good opportunity for me to get a property, a value add property, which is the type of properties I like to go after in a great market just north of Nashville. And so I'm really excited about this one. And like you said, we're going through due diligence now. Learned a lot about the property, some good things, some things that are not as good, but still nothing that would derail the deal. So,
Well, we say that leaves a little room for renegotiation.
yeah, yes, yes.
Okay, Jason. So you've got a lot of experience as a limited partner in deals. Now you're becoming the active partner in multifamily properties. Where do you see your strengths being, and what do you bring, or what learnings do you bring from being a limited partner into being an active partner in these deals?
Yeah, it's a good question, Dave. So, I bring a unique perspective in that, like you said, I'm familiar with both the passive side and the active side. So, you know, when you're looking at investing in a property, I understand what a passive investor or limited partner is looking for, right? And so through doing that several times, I've educated myself on how to really understand how a syndication, multifamily syndication works, what you need to be looking for, what types of questions you need to be asking. And then because I've also done investment on the active side, I have a slightly different viewpoint on the active side too, right? So I understand the details behind how these investments actually come together and what it takes to operate these properties and to actually execute a business plan and to make this stuff work. Numbers are just a story. Everybody's got pretty pitch decks and all those things, but those are really it's just a story. And you need to be familiar with how to make that work and how that all comes together and how to make that story come to life. So I have the benefit of investing on the passive side and the active side and being able to kind of bridge the gap and approach it from both those angles.
Yeah, that is a big benefit. Now, a lot of limited partners these days in multifamily deals have gotten the crap kicked out of them. Excuse the crude term there, but it's true. Like it was go days for a number of years. Seemed like nobody could do any wrong. Everything was going up everywhere, and then it stopped. And then we've had a massive market correction now. Hopefully, you didn't get too negatively affected by that yourself in your portfolio. But what's kind of been your takeaway from that whole experience?
Yeah, fortunately for us, we didn't have any negative outcomes from that
Nice.
experience. And I hear the same horror stories that you do, Dave, and a lot of people are facing capital calls or a complete loss of their investment. And certainly there's risk in everything, and especially in real estate. But I feel like a lot of folks got into that situation or found themselves in that situation because they didn't really understand the risk going in. And they were investing at a time when market dynamics were not normal. And for people who might have been new to these types of investments, they assumed, double-digit rent growth and single low-digit interest rates were the norm, and they were anything but the norm. And I think if people had a better understanding of what questions to ask and maybe a better understanding of the risks that were involved, that some of those folks wouldn't be in the situation that they're in now. So we took a lot of time to vet sponsors before we actually decided to move forward with one. So we set up calls, we had discussions, and my background is analytics. So I was already doing my own research on markets and figuring out exactly where I wanted to invest, and then from there finding sponsors who operated in that area. So I have a little bit more of an analytical approach to how I'm selecting markets and doing those things. But I would say, I think to answer your question in short, I just don't think people really understood the risks of these types of investments, especially based on that general time frame that they were investing.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Well, what I'm also picking up from you there, Jason, is you like the quote unquote boring steady eddy markets, right? The Midwest. You're not intoxicated by the big boom markets on the coasts like a lot of people were in that kind of artificial bubble that was going on there. You focused more on the fundamentals, and then you found a sponsor that had that same kind of mentality, and that's what you decided to plug into, and that's why you've weathered a storm that a lot of other people have really found challenging. Would that be fair to say?
Yeah, that would be fair to say. For me, it's especially in a syndication. Yes, you're obviously investing money in a property, but what you're really investing in is the management, is the team.
Yeah, yeah.
So you got to find people that you have alignment of interest with. You got to find people that have the same levels of integrity that you hope most people who are taking folks' money would have. And then, certainly markets are important, but that's almost secondary to who you're actually teaming up with. And because you're really investing in the management, you're investing in the team.
Very, very well said. So, Jason, you're in an exciting new phase of your real estate investing career. Now you're taking down your own multifamily deals. You've got this first one under contract, knock on wood that everything goes well. Moving ahead, where do you see you taking your portfolio from now on as we're recording this in mid-September 2025? Oh, you froze up on me there, Jason. And we're back.
Yeah.
All right, Jason. So where are you taking the portfolio from here?
Yeah, so I am continuing to invest passively as a limited partner. I established some good relationships with some good sponsors. Love the places they're investing. Love the type of properties they invest in. So I'm always looking for them to bring me deals. As you mentioned earlier, I am still actively investing as well, and so I am going to be hopefully closing on my first apartment here shortly. And we'll continue to look for other opportunities to invest in apartments here locally. And then I'm also working on establishing some strategic partnerships with other investors, either through joint ventures or co-GP arrangements, and really just kind of getting the word out to my network on what I'm doing and how these investments work, and trying to provide people an avenue to invest in non-traditional assets like real estate.
Very cool. Awesome, Jason. Well, if people want to find out more and connect with you, where should they go?
Yeah, people can follow me or find me at novocapitalmanagement.com. That's novocapitalmgmt.com, and check us out there or set up a call. And love to talk to whoever might be interested in multifamily syndication.
Awesome. Jason, this is great. Congratulations on your success. Congratulations on being analytical and going after a steady eddy kind of market that has allowed you to weather the storms that other people haven't weathered. And congratulations, hats off to you for getting this first apartment building under contract. I wish you the best of luck with everything.
Thanks a lot, Dave. Great to be here. I appreciate it.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.